Hello, this is the Unemployed Value Degen. I am not giving financial advice, and this is another episode of what I'm buying this week, where I want to take a look at the technicals on some of the stocks that I've written about the fundamental analysis on my Substack, but it would be nice to not catch the knives when they're falling too quickly. Before I do that, though, I wanted to jump in with just a little bit of monitoring on the situation with the 10-year Treasury. Been watching that pretty closely to see if we are going to break out of this channel. Right, we have been in this descending channel, I believe, for a little bit here. And if that's the case, if we're going to be, we're really butting right up against it. These last 2 weeks in the market have been pretty interesting, and the 10-year Treasury just keeps getting us on the edge of our seat and making us clench just a little bit. And you can see it's just come up to touch the top of that channel. If the 10-year Treasury breaks out of this descending pattern, when that happens, if it's in 2025 or 2026, I think that'll be a pretty big challenge for the stock market. But just at the moment, it's kissing the top of that channel. And I'm recording this at the end of the day on Sunday, and the futures markets are open, and the 10-year Treasury is giving back a little bit. We'll see if that holds in the trading on Monday. And then as the 10-year Treasury goes, typically, so does the dollar index. So for this dollar index, similar story. We've been in this. Let's see if I can make that channel something like that, something of a horizontal channel. And right when we had hit the peak of it, I had sent out a message to my subscribers, just buy something international. It's a good time to buy anything outside of the US, because there's a good chance we're going to have a couple months of a weakening dollar. And you know, it's bounced back just to touch the top of that channel. So again, we're all at the edge of our seats. We're all clenching to see if the 10-year Treasury and the dollar index stay well behaved, or if they break this major trend. And anything's possible, but I have a suspicion it's going to be well behaved for a while longer. But it's this is edge of your seat territory, and I think everybody in the market is kind of nervous about how this is going to play out. The last 2 weeks have been pretty interesting, where if I take a look at the S&P 500, it's been consolidating, right? It's not doing much of anything. It's just moving sideways. But if you look at the Nasdaq has just been exploding higher for the last 2 weeks, and it's driven almost entirely by the Mag 7, by the super mega cap names. And you may have seen this go around on Twitter, but if you look just at the S&P 500 value stocks, for the first time in 20 years since the creation of this index, the S&P 500 value ETF had 10 consecutive days down. I mean, in every other drawdown, you get these days where there's just this little tiny relief rally, just to just to catch a breath. But S&P 500 value has just been grinding lower for 10 straight days, from the top of the Bollinger Band to the bottom. And every other time you have a drawdown, there's at least a little relief rally in there somewhere. So this is 10 days of pure pain for anyone who's into value. And I am the Unemployed Value Degen, and it has been pure pain for 2 weeks. There's the Russell 2000. It's not as extreme as the S&P 500 value index, but still, you know, not a fun time. I'm going to go back to this S&P 500 value index. This move is so extreme. There typically has to be some kind of a bounce. I mean, things just don't move in a straight line up or down. So in the near term, I'm thinking that Monday tomorrow morning should be a pretty nice day, but we'll have to see. The futures market is open, and the Russell 2000 is currently higher than all the other indices, but a lot can change when the U.S. market opens. But this is an aberration. 10 straight days downward with no relief rally. It's very painful. Now, the Fear and Greed Index, it's a bunch of mixed signals, because we saw the Magnificent Seven grinding higher, and everything else not. So that's going to give you mixed signals in the Fear and Greed Index. But if we wanted to step back and think about it, so you had the CEO of Interactive Brokers come out and say 70% of the volume on Interactive Brokers is the Magnificent Seven. And it just seems like the last 2 weeks, and driven by small retail investors, everyone's going levered long the Magnificent Seven. Now, I think typically when the small investor comes along, they're late to the party. So that makes me think that there's good odds that come January, even the end of December, might have some rotation out of the Mag 7 and into some other areas. But wow, is it a wild time. I always like to check out on the components of the Fear and Greed Index. The put-call ratio is still, extremely low. People are buying calls, they're not really buying puts. And the volatility, the VIX, is still below its average. So options are cheap, they're not expensive, and especially downside protection. So it seems like the whole market seems to think that the way we're going is going to be grinding higher, and nobody's buying insurance. The reason why the Fear and Greed Index is mixed is the breadth measures. So you've got the Magnificent Seven, going gangbusters, but everything else lagging behind. So I think people are greedy, but they're only greedy in NVIDIA and a few names like that. Okay, now to just the technical analysis. I wanted to jump in and look at a few things and figure out, when I raise some cash from rolling puts, what do I want to spend it on? Take a quick peek at GameStop. This is that massive spike when Roaring Kitty became active again on Twitter in May, and it's I don't know what to make of this pattern. Mitch is let's see, Mitch is my go-to for technical analysis. Get this to the RSI. Yeah, I'm not seeing anything too definitive. And again, I'm not the expert on this one. You had the 50-day move above the 200-day back in May. And those indices have been coming together a little bit, but I'm not seeing it. This is going to be a major turning point, although there has been a lot of extreme options volume on this one. Medical Properties Trust. Medical Properties Trust just broke below $4 on last Friday, and as a value name, so that 10 days of value grinding lower, Medical Properties Trust got taken out with it. And breaking below $4 is it's not super common for this name. You also had a dividend there, so a lot of times people will jump in before the dividend and jump out afterwards. Let me see. How long has it been since it's broken this $4 line? So you have to go back. I mean, it just touched it a tiny bit in August. It was below it a little bit in July, but it's been staying above $4 for a while. I think this is a fantastic time to buy more Medical Properties Trust. I'm completely full. It's my second largest position. I can't add any more, but it's such a great price to add more. And my eyes might be deceiving me, but I think that might be a hammer candle. Let me just take a quick look and see. Yeah, it may be not a perfect hammer candle, but yeah, that's so a hammer candle is a day where the market starts out high. Over the course of the day, the price crashes. You get about halfway through the day, and the dip buyers come in and they buy it and they bring the price back up. And that can be a sign that the sellers are completely exhausted and that the buyers are going to take control for a little while. So the same reason why I think that the S&P 500 value index. But that move, 10 days down, 10 days of extreme pain for value. Things don't move in a straight line like that, so we could be due for a reversal. Monday could be a good day for value. But on Medical Properties Trust, I think that does look like a hammer candle. Now, let's see. You do have the death cross, where the 50-day moves below the 200-day. It's not a great sign. It's not very encouraging. So we'll have to see how it plays out. Fundamentally, I think there are so many catalysts to come. The management still hasn't talked about what they're going to do with these operating companies that they received from the Stewart bankruptcy, how they're going to monetize those. And then just thinking forward for the next 2 years, there should be improved funds from operations as those temporary operators have escalating rent, starting half rent in 2025, I think full rent in 2026. So there's going to be growing revenues, growing earnings for this company. We've had 2 huge short squeezes in May and then in September. And just at what point is this thing, the short interest is huge. I think it's like 50%. So at some point, it's going to be a short squeeze. But this has been a much longer holding period than I would have liked for a stock that, I mean, some stocks have the potential to be 5-baggers or things like that. As a real estate investment trust, it doesn't have that much upside potential. You know, there's a limit to how high to the sky this thing can fly, and it has been a very long and painful time waiting for it to do that. So I think I've been in it over a year. It's been a painful time for that holding period. And yeah, if I had it to do over again, I probably would have bought less initially and averaged down a little better. My position was completely full before it spent a chunk of time down in this $3 range, and I just could not stomach buying any more when it was already my largest or my second largest position. So that's just a lesson on position sizing and averaging in. Let's see, but I still think that this $3.98 price is, I think that's a buying opportunity. So as far as what I would buy next week, if it wasn't already a full position, I would be happy to buy this. The death cross is concerning, but the hammer candle is very optimistic. And a value has to catch a bounce, even if it's just a relief rally. Go back to my my number one thing that I want to be adding to is Finance of America companies. And that one, the write-up on my Substack is behind a paywall. But I started buying down here in the, it was before a reverse stock split, so this was 50 cents at the time. Now it's $5 for the 10-to-1 stock split. It shot all the way up to 27, gave some back to 18, 24 back to 18. These extreme spikes, oftentimes those will give some back, but this is a much healthier upward grind, so this might be much more sustainable. I don't know if we're going to see 18 again. You know, these 3 times that it shot past and bounced back to 18, we might be done with that, because this is a much healthier grind upward. We'll have to see. I'm still adding. I try to add a little every month. I'm not going to stop until this is 15% of my portfolio. And if you want to know why, it's behind my paywall. As far as next week, it is at the top of the Bollinger Band. That hasn't always mattered. I mean, when a stock is this explosive, it can keep breaking out of that. But I think this action is much healthier than that action. So we'll have to see. New Fortress Energy. So New Fortress Energy, it broke out of this $8 to $9 range. It did a very nice grind higher. It didn't have a 50% retracement during this entire upward march from, you know, call it $9 all the way up to, you know, in the 13s. It's given back a little, but it hasn't come back to the 20-day moving average, hasn't come back to the 50-day moving average. In the short term, I feel like this could fall a little in the short term. This is something that for the long term, I think it's a great company. My write-ups on it are not behind a paywall. On the short term, I think this could give some back. So we'll have to see. It's amazing for it to grind higher, even during those 10 days when value was just grinding lower. So there's a strategy to look for companies that things that are green on a red day, to pay attention to things that are green when the market is red. And for 10 days for value to be red and New Fortress Energy to be the only green thing in the portfolio, that's a strong that there's some serious money flowing into this stock and buying it without regard to what the overall market's doing. And that's a powerful statement. I still think it could give some back in the near term. So let's see. Transocean. Oh, so much pain, but I think it's at this triple bottom. So as far as what to buy next week, yeah, that's a triple bottom. It's still an ugly chart. The 50-day and the 200-day are very far apart. You had, I mean, it's there's been no relief on this grind lower for Transocean for about 2 years. It has been an ugly stock to be in. And then on top of that, I think there's good odds that we're going to hear some news about the merger between Transocean and Seadrill. Transocean migrated some of its corporate entities from Switzerland to Bermuda, which is also where Seadrill is domiciled. So the CEO of Seadrill came out and said they were happy to acquire or to be acquired, which is an interesting statement for the CEO to say, but they're pushing for consolidation in the industry. And then Transocean moved several of their entities to Bermuda. So I think it's kind of an open secret that Transocean is going to make a stock-based transaction bid for Seadrill. What I don't know is what the market will think of that. Because on the one hand, you'll have dilution. On the other hand, you'll have Transocean's debt spread across much greater revenue and earnings. So the balance sheet will be significantly improved. And the position as a market leader, especially in the harsh environment. So adding 2 harsh environment rigs to Transocean's fleet, and then another 10 deep water drill ships. And Transocean would be the clear market leader. They already are a little bit with Noble's acquisition of, I think it was Diamond Offshore or Dolphin, I can't remember which one. Yeah, so being a clear market leader, having a healthier balance sheet, you know, the market could respond favorably, or the price could fall because of the dilution. I don't know how the market would respond. From just a perspective of a short term, that triple bottom should be a pretty strong resistance. But I mean, we'll have to see. The market cap is about 15% of the replacement cost of the fleet. When you take the debt into account, it's more like 35%. The enterprise value is about 35% of replacement costs. So it's not even as cheap on an enterprise value basis as some of the other drillers. It could fall. It was $2.42 when I started buying it. How long ago was that? Yeah, that would have been in 2022 is when it first came across my screen and I started buying it. It grinded all the way to 8, and then ever since this time period in 2023, it has been a painful grind lower. But that triple bottom, I feel like this could be a decent entry point, even with the merger announcement. Again, I have no prediction of how the market would respond to that, because that dilution would be, you know, a pretty large bit of dilution. But you have the insider buying from Carl Friedrich Mohn. He's one of the directors, and he owns a large stake of the company. I don't know. I still like Transocean. It's still a long-term thing. And I think the short-term technicals are okay. I think that triple bottom will give some resistance. Profrac Holdings has been all over the place ever since the election for Trump. You can see it was up 12% in a day on the Trump election news. But it has been zigzagging all over the place. If I were to take this run up from, you know, sort of the middle of November to here, This is about a 50% retracement from that run up, and it's right on the 20-day moving average. This also, especially if value catches a break, this is a pretty good place for it to bounce and start grinding higher again. So this is not a terrible entry point either. So that makes, Medical Properties Trust, Transocean, and Profrac holdings all, with a pretty decent chance to catch a bounce here, especially if value moves. And really only New Fortress, and Finance of America, it maybe could go either way, but New Fortress Energy was looking a little bit like it had some further to fall. But I like Profrac holdings here. At the 50% retracement, still the 50-day is below the 200-day. Had the death cross back in August, but they're starting to come together. And so if it does have a golden cross within the next couple of months, that would be a strong positive catalyst. And we'll see. When it bounced at the end of November, how much resistance is there here? It's kind of amazing how, this was a support line in end of May. It was a resistance line in August. So this kind of $9.45 zone. It'll be interesting to see at what point this stock price can take it out and stay above that. I think that's going to be kind of a critical level to watch. But in the short term, I think this is a spot where Profrac holdings could bounce. Vermillion has been brutal. So this thing is, it's getting to the lower end of its Bollinger Band. It is at a point that has been, roughly a point. If I was to, there are not a lot of great resistance lines there. So the story with Vermillion Energy is the winter is projected to be pretty cold in Europe. They're drilling natural gas in Europe and Ireland and in Germany, and I can't remember if it's Slovakia or the Czech Republic. But they're generating natural gas in Europe. And on the news of a cold winter, the stock was grinding higher. Now it's grinding lower again, but it's still cold. The natural gas storage is still being drawn down pretty aggressively, and the prices for natural gas are high even out till July of next year, because the market's pricing in a very difficult time to refill that storage. So I think Vermillion can lock in a lot of really good hedges, a lot of good derivatives out for the next couple of years, and they've been good about that. For the stock to be selling off so much, though, I wonder if the market is thinking that Trump is going to not just end the Ukraine war, but also reintegrate the Russian economy with the NATO countries. And I'm not 100% sure that's going to happen. I mean, it's one thing to have peace in Ukraine, but it's an entirely different thing for the trade sanctions to be lifted and for the economies of Europe to reintegrate with Russia. For one thing, if John Mearsheimer is correct, and the U.S. wants a weaker Europe so that they stay in our sphere of influence, as opposed to a strong Europe, which is happy to engage in a lot of trade with China. So if the United States needs Europe weak, then I think the United States would push for not reintegrating trade with Russia, which would be great for Vermillion Energy. But anyway, I can't explain this price action. Obviously, oil has been weak, but it's back above $70 again. And I'm not one of those people that thinks that oil needs to be at 100. I mean, Vermillion is buying back shares pretty meaningfully at $70 oil. Every day at $70 oil is a fantastic day for Vermillion Energy. So they're just massive amounts of operating cash flow. Their big problem is they just can't stop drilling. They spend all their money drilling. But, this could be a short-term place to bounce to the lower end of the Bollinger Band. But still, the 50-day is really far from the 200-day. I mean, this is a painful drawdown. But I think we're going to hear that they locked in some really nice derivatives on their European gas production. And they usually do that going out a couple of years. So we'll see if they're smart enough to lock in those prices. Let's see. Forward Air. So the price has been pinned pretty much around this, $35 range, maybe declining a bit. there hasn't been a lot of news since the last earnings call, except that they fired their chief operating officer. So the story with Forward Air is they did a botched acquisition. I think the fundamentals of the acquisition were good, but by their corporate charter, they were required to do a shareholder vote for that amount of dilution. And instead of doing it, they just played clever with some preferred stock that then was diluted after the fact into common. And there were a bunch of lawsuits. The CEO was fired. A new CEO was found to jump in. Operationally, they haven't been digesting the acquisition very well. And recently, the president of the company, who is the chief operating officer, was let go. And I think that is still maybe cleaning house from the management team that was responsible for doing the acquisition in a bad way, and possibly he was the reason why the digestion of the acquisition wasn't going well. But I mean, now it's a much longer story to play out for them to, successfully integrate the two companies, to have some, positive operating performance. I think they're two very valuable companies, and I think logistics is going to be a huge Trump beneficiary. So especially with increased economic activity, if you have accelerated depreciation from the Trump tax cuts. But this thing has been really just in no man's land and just grinding sideways for a while. And there's not a lot of promise that the next earnings call is going to be all that amazing. 2 earnings calls ago, they did a huge write-down of goodwill. And last earnings call was the first earnings call without that massive goodwill write-down. And it was pretty lackluster. And there's nothing about next earnings call that makes me think it should be anything special. So this is something that if I was a little bit smarter, I might have exited back when it was higher, closer to 40. And I kind of want to recycle this capital into another position. So I might be looking to exit. Half of me says, wait until it's long-term capital gains. I think I bought in around $19 in July. Do I really want to hold this thing until next summer when I could take that money and redeploy it? Or maybe I could make it short-term capital gains in January so that it's on my 2026 taxes instead of my ones that I'm going to pay in April. Yeah, maybe I'll at least wait till January. I don't know if I can wait till next July, but I think I'm looking to get out of this one. I mean, operationally, they just have to digest the acquisition, pay down a little debt, if they aren't taken private first. So there's a activist investor that has, I think, 25% of the proxy votes have agreed to side with them. They want to sell the company. And so it might get another 10 or 20% bump up in price from a sale. But if it doesn't go private, within a couple of years, this will be a $100 stock again. I think the odds of it going private are pretty good. So I've already trimmed the position. Might be looking to exit. From 19 to 32 is not terrible. I rather would have had it from 19 to 100, but management has, verbally agreed to sell the company after the activist investor asked them to. So it's kind of the clock is ticking. Sibanye Stillwater, on with value getting thrown out. I think it's about $4.01 right now. Anything at this $4 range, I think, is a good buy. You've got a lot of resistance. Where is that? I mean, it was only below $4 for a brief period in September. Aside from that, I think it might be a while before platinum prices and palladium prices have recovered. But in the meantime, their EBITDA isn't terrible. Because they're South African, they only report every 6 months. But on their last reporting, 1/6 of their EBITDA came from a zinc mine that they had acquired in Australia. And this, if you go back in time about a year and a half, there was a really terrible earnings call for these guys because they had done an acquisition, this zinc mine in Australia, and the acquisition came with a copper deposit in Tasmania as well. Right after they acquired it, they had a once-in-a-100-year rainfall and the mine flooded. And the sentiment was pretty terrible that, these guys are making these acquisitions outside of their core competence. They're getting the conglomerate discount, and then immediately the mine flooded. But they they pumped it out. It's back in commission. And last earnings call, that zinc mine in Australia was responsible for 1/6 of the whole company's EBITDA. And it's pretty impressive. And zinc is going to be, I'm not an expert in every metal, but there's a lot of buzz just right now on zinc itself as one of the metals that there's going to be more of a squeeze on. I've got a Sibanye Stillwater right up on my Substack. It's not behind a paywall. It's called I Love Sibanye Stillwater and Thus I Hate Myself. And if this price action is very painful, and the platinum stockpiles, it might take a year or two before they're worn down and the platinum price improves. In the meantime, they've got a lot of diversification. I mean, they have enormous gold mining operations that they're not getting any credit for. I think they have a high cost of production. It was around $2,000 an ounce cost of production. Now the gold price is $2,700, and that's going to be gushing cash. So the market doesn't like conglomerates, but it should provide some stability to earnings while platinum prices are low. So between zinc and gold, they can, service their debt and be doing just fine. They recently acquired a 40% stake in a company. I had a write-up on DRD Gold, which Sibanye Stillwater owns 50% of, and I predicted that they were going to take their uranium tailings and their uranium assets, and they're going to use that into acquiring a 50% stake in a uranium processing company, and that's exactly what they did. So the CEO uses this negotiating tactic to try and get something of value for something that doesn't cost him anything. And he's able to turn his tailings dumps into 50% ownership stakes in the tailings processing companies. He just announced that with the uranium, to swap some uranium assets for the uranium processing companies. Again, the management team, I think they're doing a fantastic job. I understand the conglomerate discount. I think this price is, in a few years, I don't think you'll be mad at yourself for buying Sibanye Stillwater at $4. In the meantime, on a technical perspective, I think this, this $4 range, $3.90, it seems like a pretty good place to bounce from. But I don't expect this to be a short-term story. I think this is for people who want to hold it for the long term. Let's see. Equinox Gold. This had some price action recently. So this one had shot up, crashed back down. This is a, from the bottom to the top, this is a 50% retracement of this recent climb from $5.10 all the way up to $6.40. It just bounced off of the 50-day moving average. Or so that's the 200-day moving average. Now the 50-day moving average is coming close, so it could make a death cross in the month ahead. But if it bounces off the 200-day moving average and stays above that, that would be nice. On the Trump election, the gold price initially fell, and it's grinded back to $2,700 an ounce. Let me just pull up GLD. So there's the Trump election. There's the gold price falling, and then people got their senses about them and said, well, you know what? Maybe Trump isn't enough to reinstate the US dollar as a global reserve currency again, and maybe central banks are going to keep buying gold, and it's been grinding higher since. So it's not back up to $2,800 an ounce like it was in late October, but it's the gold price is stabilized, and if it stays at $2,700 an ounce, all of the gold miners will do fantastic. I've got very little fear about owning a gold miner while gold is $2,700 an ounce, while their greenstone mine is supposed to have an all-in sustaining cost of $900 an ounce. So bouncing off the 200-day moving average, this is probably a pretty good place to buy Equinox Gold. The overall trend, it doesn't look pretty, but it is a rising pattern. It's been having these higher lows, and unless that pattern of having higher lows is broken, and especially where gold is at $2,700 an ounce, I think this is a very reasonable place to buy Equinox. I might like, let's see, I might like Medical Properties Trust, Transocean, Profrac Holdings and maybe Sibanye Stillwater a little better, but I like Equinox Gold here. Douglas Elliman. So Douglas Elliman, in the middle of October, they had a coup, replaced the CEO, who was almost essentially a founder of the company, was CEO for 20 years. They kicked him out of there. The market was pretty happy about it. It's grinds higher, 50% retracement, grinds higher. This recent sell-off, other than it just being a value stock, and also being interest rate sensitive, because you expect a real estate broker to be very interest rate sensitive, and that interest rate has been, again, this entire period is grinding higher, until we get that interest rate relief. I think this is probably a pretty decent place to buy some more Douglas Elliman. And this write-up is paywalled on my Substack, so the fundamentals of it, there's some stuff going on in the accounting statements that I think make this, the company is much better than it appears. The new CEO, though, he did give an interview and talked about some of his plans, and I'm not against it. You know, I don't think it's terrible. The previous CEO, I think, had excellent leadership for the COVID pandemic. I think the way he led the company through that by focusing on new build condos was a great move. And yeah, this retracement, pretty good odds it'll bounce off this 50-day moving average. No guarantee, but I think this is a good place to buy Douglas Elliman. Because all these stocks are value stocks, and we've had 10 days of value going straight down, and I think it's going to bounce. I think a lot of things are going to be at a good place to buy, but I'm seriously considering buying some Douglas Elliman next week. Peabody Energy, you know, I put out a note to my subscribers on Substack when it was at this 200-day moving average. That was also the bottom end of the Bollinger Band. I said, you know, it's a pretty good odds it could bounce there. Crashed back down to 23. I said, hey, I'm still buying, and now it's at 22. And then the meme for Peabody Energy is that 22 is the new 18. If you go back in time, there was a long period where the stock was bouncing off of 18. So if you take $18, and so for all of 2022 and 2023, the sentiment was, if it gets to $18, just buy it. And recently, the sentiment has been 22 is the new 18. That when it gets to 22, just buy it. And I think that there's excellent odds of that. I think that the 22 is the new 18 meme for Peabody Energy. You know, I think very good odds. I mean, I bought some at 23.80. I bought some at 23. I still think that the bounce from the lower to the Bollinger Band, I mean, this stock has been really well behaved. If I just go back to the 1 year, if you just buy this stock when it's at the lower end of the Bollinger Band and sell it at the higher end of the Bollinger Band, this has given you a lot of opportunities to make money over the last couple of years. And I think this is a good buying opportunity. So I'm not against buying more. There is the recent acquisition they announced, but I think the 22 is the new 18 meme is not going to be broken by the recent acquisition announcement. Cardlytics, you know, Cardlytics keeps making me think it's breaking out, and then it gives it back, and then it keeps making me think it's breaking out, and it gives it back. I'm still trying to slowly accumulate a position because I think it has the capability of being a genuine 50 bagger. But still the technicals are not showing me any promise. This is a new one I wrote about, Perspective Therapeutics. I think it's behind the paywall. It's such a recent price collapse from 12 down to 350. Can't really get any information out of this behavior. There's not enough time for it to form a base and find a bottom. But if you want to read my paywall write-up on that one, I'm extremely enthusiastic about it. Let's see. Heartland Express. You have it at the lower end of the Bollinger Band, and you have the 50-day and the 200-day just extremely tight. This is the sort of thing that you can get an explosive move one way or the other. And I think logistics is due for a pretty good time going forward for 2025. If there's some rebound for value over the course of the next couple of weeks, it's just really been amazing to see everybody go levered long into the Mag 7 and have everything else sell off. I don't think that can happen every day from now until January, but we'll see. And this is the sort of setup for an explosive move higher or lower, but in the long run, I'm a big fan of Heartland Express. Keep on buying that one alongside Portillo's. Now Portillo's is a different story. That one crashed below the 200 moving day, tried to break above it and failed, and it's getting back to this $9 resistance range that it was in before. When it broke out, I didn't think it was going to see this area again, right? I thought when we had broken out to the $12, $11 range, I thought that we were away from this old resistance point. And when it broke below the 200 day, it's crashing right back to it, which is kind of amazing. I think this is a fantastic buying opportunity anytime it's below the 200 day moving average. I don't know when it's going to bounce. I mean, with this kind of price action, could keep going. I think this is about the $9 range. What's amazing is they're opening for 2024. They're growing their restaurant count by 11.5%. 2025, they're targeting between 12 and 15%. You've got yeah, it's just amazing, and they're still profitable the whole time. I know the restaurant space generally is stressed, but Portillo's is doing fantastic. But the price is not doing fantastic, but I'm still buying. I did a recent write-up on Titan International, and I liked it so much I had to immediately start a position. I don't know what I can tell about these technicals, though, because you had, and Mitch told me, avoid, that the technicals were not looking very promising. I think that's probably true. You have the 50-day below the 200-day. They're still a good bit apart. But you do have, I think, a pretty decent resistance line. Maybe, if I'm imagining it. What is that, around $6 something? And so this massive spike upwards, I mentioned this on my paywall right up on the Substack. The CEO of the company, and he's been the CEO, I think, since 1983. He's actually, let's take it back. He's the chairman of the board. He's no longer the CEO. He's the chairman of the board. He initially was one of the two people that bought the assets from Firestone in 1983. And 15 years ago, this company was also a government contractor. And he mentioned the possibility of becoming a government contractor again and landing a nice Department of Defense contract. Now, management should not be in the business of talking about things that aren't really concrete. I think it was very, very early to be talking about that, because they were not even remotely close to the finish line. And so on that rumor, the stock price shot up. But then when people realized that it was the sort of thing that the chairman of the board should not be talking about, it crashed back down originally. Under the surface, though, so I don't want to talk about the fundamentals too much. That's behind the paywall. I mean, we'll have to give it some time to see if this is really holding, but it could be starting to break out. And I think it should break out. I think it's a good company that should break out. This is another thing where the last 10 days have been terrible for value. Think about what's green on red days, and it's on the 10 days that have been terrible for value, it's up, right? It's from $7 to $8, and not in a straight line. But again, I'll compare that to the S&P 500 value ETF. So when value as a factor does this, any stock that can buck that trend, any value stock that's moving higher while value is falling, that's worth paying attention to. When I wrote about it, I immediately started a position, and it's kind of in the same category as Portillo's and Heartland Express. I just want to keep adding to this one slowly, not as aggressively as Finance of America. I am a huge fan. Kind of the fourth one in that group is Alta Equipment Group, but this one has been selling off with the value stocks. I mean, it's still up since October. It still has broken out of this consolidation period. And the question is, could it come crashing right back down? But this is, I believe, is going to be one of those huge beneficiaries of accelerated depreciation. I think come January, they're going to have a huge influx of orders. But that might not show up on their next earnings call, so we'll have to see. Yeah, I would be happy to add here, but from a technical perspective, you're below the 20-day, but you're not hitting the Bollinger Band of the 50-day. I think there's a good chance this would keep on falling until it hits some resistance, a place to bounce off of the 50-day and the 2 standard deviations from the 20-day, the lower Bollinger Band. So probably nothing stopping it in the short term from falling more. In the longer term, I'm hoping that this, it's not a huge pattern yet, but that's a couple of higher lows. Obviously, if it breaks below the 50-day moving average and crashes back down, if it breaks that trend line, but it's only for 6 weeks, so it's not much of a trend line yet. We'll have to see. I would take Titan International as far as where to add to. I think this is a more promising chart. To be able to be green on 2 weeks of red is pretty exciting. Let's see. My only data center build-out beneficiary, Applied Optoelectronics. So I think I wrote about it when it was about 16 bucks a share, and I bought some at about 16 bucks a share, and it has went all the way up to 45 or so, and it's crashed back down. It has bounced. There wasn't any resistance here, but just something slightly below the 20-day moving average. It's starting to climb again. Now, I had sold a call at 30 bucks. When it was here above its Bollinger Band at about $28, I said, well, maybe it's overdone. I'll sell a call for a month and take some money off the table. And it did fall back below the Bollinger Band, but it immediately grinded higher. So I felt like a bit of a fool. But when it was here at about 38, what I did is I rolled the call from, so it was I sold a call December at a strike price of 30, and at this time I rolled that, so it bought back the December 30 call, and I sold a March 35 call, and that was cash out also. So I took cash out when I sold this call, and I took cash when I rolled it. So if it gets called away from me in March at 35, I'm fine with that. I think there are odds that if the data center build-out story keeps going, this thing could grind higher. They had a really good earnings call, and it was undervalued. And the calls I sold, it was only on about half the position. I left half the position without calls on it. My best understanding of what's happening in the data center build-out space was that the NVIDIA story and the AI story was running out of steam. And then Elon Musk goes and does the impossible. So the current limitation was people had been unable to get more than 20,000 chips that communicate with each other to form a cluster. And Elon Musk was able to, through I forget if this is Grok AI or whatever he does, but he was able to get 100,000 chips linked together and talking to each other. So he broke that previous limit of having 20,000 chips talk to each other. And Jensen Huang kind of said that single-handedly changed the narrative, that now maybe the whole data center build-out story was running out of steam, but now Elon Musk has just reinvigorated it. So shame on me for selling calls on this. It could just keep on grinding higher. You have the if Golden Cross happened in the middle of October, this very far apart from the 50-day and the 200-day moving average, this thing could easily keep on grinding higher. I don't know if it's going to have any major gap ups like this. Maybe it'll have a much slower and healthier grind higher. When March comes, I'll see if the price is within any sort of a moderate range where I can do another cash out roll and move the strike price. But I'm a value degen, so growth stocks don't come naturally to me. And I did sell a call. Might not have been the smart thing, but I've taken cash off the table twice now, and I'm not against that either. Let's see. ARS Pharmaceuticals. So this one's breaking down, and that's a little unfortunate. I forget where I first bought it, and I forget where I first wrote about it, but it had been bouncing off the 50-day. 4 times it bounced off the 50-day, and then in November, and this is on the election, so November 5th with Trump, it just crashes through. I think the narrative with biotech is that, you know, RFK Jr. is going to go in there and it's going to just wreak havoc on the entire biotech industry. When things sell off, they all sell off together, but I don't think that's going to have anything to do with this epinephrine nasal spray. So fundamentally, this is a buying opportunity, but technically, it's pretty ugly. It's at the lower end of the Bollinger Band. It's getting close to the 200-day moving average. That's a reasonable place for it to bounce. But with the sentiment surrounding RFK Jr., I don't know if it will bounce. It could just keep on grinding lower. I don't think RFK Jr., I don't think the Trump administration is going to be as bad for all pharmaceuticals, because you have Vivek, who's a biotech startup guy, and he's talking about streamlining the FDA approval process and get more drugs approved. So I think it's not clear what the Trump administration is going to be good or bad for pharma generally. And this is not Pfizer, this is not Moderna, these do not have any coronavirus vaccine exposures. This is an epinephrine nasal spray. So I think this is probably a case of the baby being thrown out with the bathwater. I think this is a fundamental buying opportunity. From a technical standpoint, the place to bounce might be still another 50 cents lower from here. It could easily crack below the 200-day moving average, which is also a great place to buy. On Twitter, people are talking about inside sales, and there is insider selling. The thing about insider selling is it's a noisy signal. There's pretty much always insider selling. It doesn't necessarily mean anything. Insider buying, there's only one reason why an insider would ever buy. But there's lots of reasons why insiders can sell, and insider selling is kind of the norm. Most C-suite executives don't think of themselves as capitalists. Most C-suite executives think of themselves as employees, and their stock-based compensation, they think of it as part of their salary, and it's meant to be sold in their mind. It's not meant to be, you know, an ownership stake in the capital stock that they want to have for appreciation. They're not thinking about if the prospects of the company are good or bad. They're thinking about, this is my paycheck and I want access to it. So there is insider selling. I think that's more noise than signal. I think this sell-off is mostly because all biotech is selling off because of the, and you can see it, right? It's November 5th, and it's November 5th it crashed below the 50-day, and it's been grinding lower ever since. So I think this is the RFK Jr. effect. And, you know, fundamentally, I think it's a good story, but where is it going to bounce from there? I don't know. I asked Mitch, you know, technical agnostic, what are your four favorite narratives? What are your 4 favorite fundamental stocks? And for him, ARS Pharmaceuticals was in the top 4. He had Finance of America, which is also my number 1, ARS Pharmaceuticals, Portillo's. He was also a fan of Joe, and I like Joe, but Joe has not been performing well. I did a trade alert to buy it at about, I want to say $52 a share. Said, oh well, this crash, you know, to its lower Bollinger Band, that should be a reasonable place where the stock could bounce, and it did not. It's grinding lower. Now the this, you know, grinding lower could be on interest rates. It caught a bounce when everything bounced with the Trump election on November 5th, but it's been grinding lower, and I think the reason for this grinding lower is on this entire period with interest rates. So if I look at, when did interest rates start grinding higher? I'll zoom in a little closer. Go to the 3 months. So leading up to the election, and people that are saying that they saw the Trump victory coming, that was starting in October, and you have the 10-year Treasury kind of rising higher with that. So does that match with Joe's price collapse beginning of October, maybe middle of October? Go back to the 10-year. So yeah, it seems pretty plausible that this price collapse is directly related to interest rates, because it's a real estate development company. There was the news that the chairman of the board essentially retired, but he's still the majority shareholder of the company, and the CEO that he put in place, he still controls the company, whether he's the chairman or not. So I don't take that as a negative. He's not like he's selling his stock in the company or anything. He's he just stepped down as chairman of the board because he's kind of retiring. Yeah, I can't explain this this stock price. I think this is probably an excellent buying opportunity. It's still at the lower end of the Bollinger Band, but at 46 bucks a share, how far back in time do you have to go to get to 46 bucks a share? Let's see. That's where it was. Yeah, that's the recent lows. That's November of 2023. And maybe $46 is going to be a double bottom, some kind of resistance. Maybe it has a little bit more to fall. But this is, I forget how many tens of thousands of acres it is of land in the panhandle of Florida, but this is an enormous real estate holding. It doesn't show up in book value because they bought that, I think 80 years ago as a forestry pulp and paper company, but now they have just enormous acreage near the coast, not on the coast, but near the coast in the panhandle. And it's also on an intercoastal waterway. So a huge real estate development company. Yeah, again, 52 may have jumped the gun, may have been a little early there. 46 is has decent odds of being a bottom. And also, there's decent odds of the interest rate falling. Now, if the interest rate grinds higher, obviously the price of this could crash. Might be worth waiting a week to watch it. You have just this morning, so this is overnight. You can see what time I'm recording. There's a little bit of interest rate relief just overnight. But if we break out of that channel to the upside, I think that there will be some pain in anything that's interest rate sensitive. The home builders, the real estate brokers, any of that, there'll be enormous pain. I think we're going to stay well behaved in that channel for a while yet, maybe all of 2025. We'll have to see. That's more of a gut feeling than anything. So that's Joe. Every time I do a trade alert, I do actually buy some of the stock on that day. So I did buy some Joe at 52 when I put that trade alert in. From 52 to 46 is a pretty painful grind lower, but from a fundamental standpoint, this is an amazing buying opportunity. From a technical standpoint, the only resistance is at $46, and it's not a multiple bottom, it's just a single bottom from over a year ago. So this thing, it could keep falling. You have the same 10 days grind lower with all the value stocks, and this is a value stock. So if value catches a bounce, will this catch a bounce? Yeah, I think this is a pretty good buying opportunity, but not because the technicals agree with it. You have the death cross, so the 50-day crossing below the 200-day, that took place toward the end of November. That's not a good look, right? Below the 200-day moving average with the death cross. This thing could keep grinding lower. Still a great fundamental story. SoFi has been incredibly strong, barely even touching the 20-day moving average except until recently. It's entered this consolidation period around $16, $16.25. Now, when a stock stops going up, that could alone be a reason for the stock to come down. So we'll have to see how it plays out over time. But you have still a wide divergence between the 50-day and the 200-day. It's very capable of grinding higher. but it also could not. I'm not looking to add to my SoFi position that I started. I think I started around $8, and probably further back. But I wouldn't sell any either. So I'm not buying or selling here. It's more of a wait and see what happens, because financials are poised to do very well. They were, I think for 2024 now, financials have outperformed tech. But if you're looking at 2025, Trump has promised banking deregulation, along with the central bank cutting interest rates, and potentially the yield curve just flipped positive. So a positive yield curve is good for banks, deregulation is good for banks, and falling interest rates on the short end. Well, again, that's the positive yield curve. So the banks and financial institutions, and also SoFi benefits because they have access to IPOs. They give their investors access to IPOs on their platform. And there are very good odds that with this falling interest rates, you're going to see a merger and acquisition wave and an IPO wave, maybe in the second half of 2025. SoFi would be a huge beneficiary of that, as people want to move their brokerage accounts to SoFi to have the ability to participate in those IPOs. So yeah, I wouldn't sell. It's got a good fundamental story. Technically, yeah, I mean, that's a strong chart. It's just maybe a little too aggressive. It hasn't had much of a retracement, and now it's moving sideways. So if it doesn't regain some upward momentum, we'll have to see. But I'm a little cautious that this one could come crashing back down. It's just very common to do a 50% retracement. On the way up from 8 to 16, could it come back to 12 and do that 50% retracement? Absolutely. Or it could come back and test the 50-day moving average. We'll have to see. Well, I think that's all the names I want to talk about today. There's a lot of natural resource names, the uranium names, things like that. Maybe Centrus Energy before I say goodbye for the evening. So Centrus Energy. So Russia implemented a ban on exporting enriched uranium, and that could cause Centrus Energy some problems. At the same time, they just won another Department of Energy contract. So that's 3 for 3 on the Department of Energy contracts. And this one I think has a $3 billion maximum budget. So it's $2 million minimum, $3.4 billion maximum spread across 6 winners of that contract. And again, I think that the purpose of these contracts are specifically to give Centrus Energy the capital to build out their enrichment. But in the meantime, they might be force majeure in breach of contracts. They're not able to import from Russia anymore. There's a possibility that when Trump gets in, that becomes undone and they can import that enriched uranium again. There's a possibility that they'll work something out with the companies that they have to supply to. Sometimes companies will take a contract, and if the other party can't fulfill it, they'll put in the maximum penalty. And sometimes companies will say, well, look, you're our preferred supplier. We want you to survive. We don't want you to go through bankruptcy because we want you to supply us again. So even though they have the right to enforce penalties in the contract, that they will waive that for the health of their supplier. So it remains to be seen how Centrus Energy is going to be affected. There's this enormous run up from 40 to 120 and back down to 70. It's below the 50-day. It's not great. It's below the 20-day. That's not great. But it's kind of chopping sideways. It's mostly down in the last 10 days when all value stocks are down. This is not a value stock, but pretty much everything that's not the Magnificent Seven was down. I'm not really getting much out of the technicals from this that I can tell that things are going to be positive or negative. I think we'll probably have to wait to see if Donald Trump actually does end the Ukraine war on day one of his administration, and how, to what extent the relationship with Russia is patched up. Because there's a big difference between ending the Ukraine war and then Russia still in an adversarial relationship with the West and in China's sphere of influence, and ending the difference between that and ending the Ukraine war and Russia reintegrating its economy with the European Union, and ending the sanctions on all of the companies that Westerners are not allowed to invest in. and letting natural gas flow from Russia into the European Union again, so their electricity bills come down. It's a very different world. There's a couple different ways to end the Ukraine war. It's ending the Ukraine war with Russian reintegration, or ending the Ukraine war with Russian adversarial behavior. So if Russia ends the export ban on enriched uranium, I think Centrus Energy is going to be one of the best performing uranium stocks out there. I think it's more of a fundamental story than a technical story. But until then, I think we're all clenched to see what this 10-year does, and if it stays in this channel, if it starts to dip again, if it stays well behaved, or if it doesn't, and that's what we're all watching for. And this crash in value, which corresponds with this grind higher in the Mag 7 and the NASDAQ. How much longer can that go on? Is this going to be all of December? Do we have 2 more weeks of that, especially with the thin trading surrounding Christmas and New Year's? I think this is overdone. I could be wrong, but my best guess is next week sees at least a little bit of a reversal or some relief, where the NASDAQ and the Magnificent 7 give a little back, and the value stocks catch a bounce. Because again, since the creation of this index, the iShares S&P 500 Value ETF, we've never had 10 consecutive red days in a row. This is the first time in 20 years. And that covers the global financial crisis, that covers COVID, covers the taper tantrum. I think this index was created in 2004, so it doesn't cover the dot-com bust, but such an extreme move, there's usually some kind of a bounce afterwards. So will we get a 50% retracement back to the 20-day moving average for value? I think that's highly possible. I think next week could be a good week for value and for small caps. But no guarantees, just like everything in technical analysis. Anyway, thank you for watching. That's what I'm buying this week. Well, maybe a little bit of a summary. What looked good? Medical Properties Trust, Transocean, Profrac Holdings, Sibanye Stillwater, Equinox DUG, Peabody Energy looked very good. Titan International looked very good. Portillo's, Alta Equipment Group, Cardlytics, those did not look so good. Vermillion Energy did not look so good. New Fortress Energy did not look so good. So there's plenty of things that seem cheap when value sells off for 10 days, but not everything does. Anyway, thank you for watching, and I hope you have a very good week.